Hello, guys. Welcome to the pre-market analysis of 13th of May. So we will look at what can influence today's market, and it's firstly US inflation shock. We'll discuss that, and then oil is again above 108. Very important that we need to cover again. We used to discuss the same in the previous pre-market analysis also, but here we'll again discuss that. And then US-Iran negotiation is becoming weaker. In fact, Trump have called the proposal given by Iran as unacceptable and crap. Okay, so the things are getting again escalating, and we need to discuss that. And when we come to our market, it is even more weak because rupee is hitting all-time low every day. So that's something which is very important. And for us, oil is more important than anything. So as long as oil is above 100, right, our current account deficit, trade deficit, and all this increasing, that is again adding pain on rupee. That is again adding pain on forex outflow. So FIA selling is also another dimension. And adding to all these, Prime Minister Modi have also gave a warning or a caution, right? Fuel conservation request, not to buy gold, work from home, and all those, that again added pressure to the market. And we have seen from 24,600, 500 couple of days back. Now market have closed 23,500 also. Yesterday, almost 400 point dip from high to low. Day before also, we have seen close to 380 point dip from high to low. So almost 1,000 points we lost in last 3 days. Okay. Now let's see what is going to happen today. US inflation is also becoming higher than expected. So all these will be affecting. Let's start with the US inflation. Yesterday, after the Indian market close, both India's and US inflation data came. So if you see US inflation, what was the expectation was 3.7 and actual is 3.8. So it's higher than expectation. And when it comes to US markets, even a small fraction in terms of inflation or interest rate can make a big impact. Okay, because the base is very small. When it comes to India, you see some 6% inflation and 6% interest rate, etc. 6, 7%. It's not a big deal. We have seen this about 10 also, right? Growth also will be like that. But in case of US, it's not like that. It's 2%, 3%. US, Germany, Japan, etc. will be like the percentage terms, it will be very less because that base is big. So it's again more than market expectation. Now, see, it's the highest inflation since May 2023. And the reason, of course, is related to war. And if you see monthly also, if you see it's around 0.6% increase, and it's very high. Okay, so but still, core inflation, if you consider core means you exclude the volatile items. For example, when we calculate inflation, food and fuel will come. These food and fuel are very much volatile because it depends upon, especially when we talk about India, why core inflation is more important is because we depend heavily on monsoon and we depend heavily on oil, on imports, and oil for imports and agriculture for monsoon. So these are very volatile. Sometimes you see the prices skyrocketing. Sometimes during bumper production, the price may fall. Onions, you might have seen it is priced at 200 also when there is a shortage, when there is a bumper production. But during crisis, it will, in a bumper production, it will be like 2 rupee, even 10 rupee. But when there is a bumper production, it can be very less. If there is a shortage, it can go to 200, 300 also. I'm talking simply about onion. So core inflation means you exclude these two very volatile items, food and fuel, and then you see the inflation. So you get that stable because this can change sharply, food and fuel. So if you exclude that, you'll get core inflation. Core inflation is below 3%, which is okay, but still it's higher than expected, right? So mainly this food, fuel, etc. is affecting. And energy inflation is also a bigger concern, and that's increased almost 18%, and that's highest from since, if you take from September 2022. Gasoline prices have increased more than 28% year on year. Reason also, we very clearly know. And US data very clearly confirm oil price is increasing mainly because of US-Iran conflict, and it's becoming a macro issue for US also. So think about our case, right? US is to an extent, they have all the production possibilities and everything, and they are kind of themselves independent on oil at this point of time. But still, they are facing issue. That means we can imagine what will be the issue that we are going to face. And Prime Minister warning is very important if you consider this context, right? And the war, again, if I'm going into that, the situation is worse again. Trump gave a statement that the proposal of Iran is completely unacceptable. It's crap and it's a piece of garbage. And there is a CNN report that Trump administration is seriously considering that they'll restart the attack operation if negotiation fail. And there is no possibility that the negotiation is going forward in a good way also, because Iran is asking for compensation, war-related damages compensation, and all that is not possible. In that case, it is against completely Trump, right? Then why did you started this war? You started this war. You have spent a lot on the war itself, billions and trillions, and now you need to compensate for all those damages. Also means then Trump is going to face the heat. So that is something which is that's why it is unacceptable and piece of garbage, he said. So if you see oil price, because of these tensions and escalation possibilities, Brent is around 108, even WTI crossed 100. Yesterday it was 98, it's 102. Apart from that, UK also announced they are preparing drones and jets and warship in case if there is a future requirement, a defensive operation required at Strait of Hormuz. Because now they are also getting into the act, and we have discussed UK and France sending their warship also to protect the ships around Strait of Hormuz. So see the confidence in quick peace agreement that we had last week, where the market rallied, that is reducing significantly, and the possibility is now coming very less. Now, at one point, if you see, Nasdaq was down by 2% yesterday. It was very big dip, and S&P was down almost by 1%. Dow Jones deeply was negative initially, and it was trading. If you look at during our market time, the US futures were trading negative also, but later recovered because defensive sectors have supported the recovery, like healthcare and consumable durables. So final US closing, if you see, it's marginally positive, but that doesn't mean our market may turn positive. But one thing is that our market already priced in all the negatives. Last 3 days, 500 point dip, almost 3%. Uh, Sorry, if not 500 point, 1000 point plus, right? So close to 3% in 3 days, market have fallen, even more than that. So it's already priced in, but maybe you cannot see this kind of recovery. Like at one point it was 2% down and then recovered, means that's something very good, right? So Indian market have our own issues as well. We have seen rupee depreciation is the big issue. That's not there in US. FII selling is in even another big issue which directly attack and impact the market, which is not there in US. Oil crisis that we face because of complete reliance on the import that we face, but they don't have, right? Issue, and our current account deficit, our forex reserves, and all these are the bigger issue when it comes to Indian market. All these are directly affecting the market also. See, oil price is going up, current account deficit will decrease, that add pressure on forex. That means rupee depreciate, that will attract FIIs to sell more, that again will push the market down. So this is specific to Indian market. So if US market fall 1%, that definitely will be affected here, and we will fall extra 1% because of these specific issues that we have. This is something which you need to keep in mind when you're trading. So just because US market turned positive, that doesn't mean our market also equally turn positive, and don't look at such kind of targets also, something which you need to be very careful. This is the kind of understanding that you need to have about our market at this point of time. Cool. S&P also recovered almost 0.2%. It's flat, it's negative 0.2. Nasdaq is a worst performer, but it was doing very good before, and it's 0.7% negative. But remember, at one point it was more than 2% negative, but it recovered almost 1.5%. VIX have fallen, which is very good sign compared to yesterday. It's now it is 18 from 18.5, which is good. So technology stocks are showing some kind of weakness that may have an impact on IT, but panic is not exploding. VIX have came down. So as of now, see the uncertainty is there, and we have seen bigger scenario also before. So market have seen this. See, anything when it comes first time, there will be an issue. But when the same thing again and again is coming, market anyway got adapted to that. COVID came, first time market crashed. But second time when COVID came, second time also there was a lockdown, but market was rallying at that point of time, right? So second time, now it won't be a big, unless there is another attack resume, or counter attacks also starting, then market will stay like this. But remember, our market have our own problem. Gift Nifty is indicating a small gap down signal. It is around 23,360 level. So we may get 70 to 80 point gap down. and we need to see whether it is now going to 23,000. Chances very less, but if you get some news related moves, then it is possible. So see, despite Nasdaq have shown that kind of weakness, bad inflation data. In this case, normally we were looking for something like 200 point gap down, but looking for 70 point gap down, that means Gift Nifty is not collapsing aggressively. That means Indian market already priced in these negativities, these uncertainties. Yesterday there was a big dip, right? It's a complete trending day. Day before yesterday also close to 400 point. Yesterday close to 400 point dip. So everything is priced in, not much panic. Now 70 point gap down. We need to see whether it sustained and whether it continued to move further on the downside. Since it's not an expiry day, there is a higher probability that it can be a trending day. There could be a recovery or there could be a further down move. Chance of consolidation or sideways market can be very less today, right? It is like on expiry days that you will see, but yesterday being expiry day, despite they have to control everything, but still you got a downside one side rally. So the momentum is still weak, but panic is not much there, right? Like no panic collapse. It's like steady and smooth down move is what you're seeing. One thing that you see yesterday is it got a small gap down. So even the retailers also got an opportunity to participate in the downside rally. So it's a consistently down move. FIAs are also selling, retailers are also joining the party. Day before yesterday, if you see, it's a big gap down. So retailers are not getting opportunity to participate on the down move. So you got a spike on the upside when DIIs bought and then FIIs sold. We were not getting opportunity. But yesterday, since it's a small gap down, we all got the opportunity and we all did well, right? Now, if you look at ADRs, HDFC ADR 0.6% negative, showing some negativity. ICICI more than 1% negative. Infosys is 2% negative. Wipro again 2% negative. Uh, yeah, but if you look at yesterday's Indian market and compare this ADR, it is comparatively less, right? Relatively smaller. So that is okay. That means there is no fresh panic selling or fresh trigger you are not getting from the ADRs. It's compared to Indian market fall yesterday. It's fine. But still, there is a continuation of that cautious sentiment. Again, IT sector is a bigger concern. If you look at IT index, it now fell to 3-year low, an index, right? So it's not 54 weeks. It's not 108 week also. It's not 162 week also. It's 162 week low. Normally we talk about 1 month low or 54-week low. That's the extreme, right? But now it is 3-year low. So the bigger trigger, of course, all of you know that new AI company, right? And that is directly, embedded the engineers into organization and implement AI solution. So market is interpreting like direct competition to all the traditional IT service models. So that directly affect this new AI company model that affected the IT, and we have seen that. And HSBC also said global AI spending related to that, it's crowding out and traditional Indian IT spending. So there is a concern that companies may spend more on AI infrastructure automation instead of that traditional outsourcing. So that jobs also will be gone. Investors are also having less confidence on that. Apart from that, Indian IT earnings are also weak if you see, and from the March in quarter, if you see, the earnings are also weak. So investor confidence is coming down, and that's why investor confidence towards IT is getting very weak. So, but don't think that the Indian IT is finished. It's not that. Currently, the sentiments are weak. Of course, we will get adapted to situations. Of course, they will also shift to. We have seen TCS initiatives as well. Right now, coming to Indian inflation, actual inflation is around 3.48. RBI target is 4%. Below the target, expectation was around 3.8. It's a positive surprise when it comes to Indian inflation. But March inflation, if you see 3.44 only, compared to March, it increased. But below expectation. In case of US, it's above expectation, but we have below expectation. Just one negative is that compared to previous month, it is high. That's because of the war. There is slight increase, still below expectation, still below RBI target. That is positive. Food inflation, if you see, as I told you before itself, food inflation have increased from 3.87 to 4.2. That because of cooking gas and all those. Even in hotel also the prices have increased, right? The items that we consume from hotels 2 months before and now very clearly we are seeing the impact of the war in our household, in our, you know, sites also, right? Now, very clearly it is visible. War is clearly, coming into our dining space also in each and every aspect of our life also. So inflation still under control, but that upward, pressure is slowly ticking. That is there. Future inflation risk is there because fuel prices still not, corrected. In fact, uh, if you see what is happening is crude oil prices increasing, it's still not passed on to the consumers by the government, right? Because of subsidy. Now, the moment here in the petrol pumps that you go, you are paying the same, right? But you can see from 60, it was going to 120, doubled also. It came to 108, it came to 90. You see this kind of fluctuation, but we are paying the same amount in the petrol pump. Maybe if that is increasing, that is when it will definitely and directly be reflected in all other items. So possibilities that in future the fuel price may hike because of this, because the government is spending a lot and a lot going on subsidy also. See, that's why people ask always, right? When the price is coming down, crude oil price, why the government is not reducing price in petrol pumps? Now the government is not increasing also. Because if you start doing that every time, every day you will have to keep changing the price, like jewelry, right? That is not possible when it comes to petrol. So this kept in a fixed level by the government. If there is a dip also, you are not going to get that, right? If there is an increase also, you are not going to get affected with that. In that case, government will subsidize with the thing that you get from here. So it's a kind of cross subsidization and management. Otherwise, we can collapse because we are completely depending upon oil. But one thing is there, it can increase later. Okay, because this deficit is increasing, so it can increase later. If it increase, overall inflation possibility is high for the future, and it will have an impact on rupee also. So weak rupee again can be inflationary, right? Because then what happens? India imports, and that import will cost more. It is affecting the market very badly. So present inflation, if you see, it's fine, but future inflation risk is very high. Again, if you look at FII data, they are net sellers yesterday. They sold 8,500 crores. Big DIIs bought close to 6,000 crore. And if you look at open interest calls, 41% unwinding, puts 31% unwinding. That's because of expiry. And PCR slightly improved 0.77 to 0.89. Right, that's an expiry impact. Now, apart from that, technicals I've already discussed yesterday. Yeah, yesterday there was a small gap down and then closes at around 23,380. A long red candle, good selling is what you have seen, consistent selling, strong selling pressure. It fell below 38.2 Fibonacci level also, even 50% Fibonacci level also, and below all the key moving averages now, below 40 RSI. Now the resistance is 23,400, 23,500 level. So if goes below 23,200, then it can touch 23,000, right? So if it comes above 23,400, then only further move we can expect on the upside, but chance is very, very less. Okay, now coming to the options data, maximum follow high now is at 24,000 and then 23,800, then 23,500. These are 23,500. Yesterday's shift it was. Put side, if you see 23,000, so the larger range is 23 to 24. And then put side 22,800 below that, and then 23,500 also there. That is those players who's expecting the market will move above 23,500. So the range is 23,000 to 24,000 for this upcoming week. So overall, US inflation, that's a strong negative trigger, but US market have recovered. And then oil is again 108, a big negative for our market. Iran negotiation weakening, that's big negative for global market, including our market. IT sector is under fear, that's across the world and for our market also. Our market only positive is that inflation is low and below RBI target. There is no panic collapse despite US market have fallen yesterday when it comes to gift nifty. There is no such collapse because already that negativity has been priced in. So market sentiment is weak, but not yet fully in a kind of panic mode. 23,400 is a resistance, 23,000 is a support. Watch movement, oil movement, and US Iran headlines also, and keep a watch on IT sector that can drag the market. So these are the main updates. I know it took slightly long because words are not coming. I just woke up and then I started doing it. So it's not coming so fast, and that's why I know I slightly went so slow today. It took some time also. So thank you so much. If you would like to join us for the live market mentoring session, get in touch with us.